Chris Pollock.
And we're going to be sort of going through the week. We're going to be talking about contract expirations. We'll be talking about half term, and we'll be talking about a few trades that we took this week and what to look ahead. So I'm going to start off with Chris. Welcome back, Chris. How was your holiday?
Yeah, I had a lovely trip. Thank you. Off to the Canaries for some winter sun. Two things I love: sunshine and kids clubs.
Oh yeah.
And the kids enjoyed that too. So it gave everyone a well-needed rest and a little bit of vitamin D, which is not something you see in London too often, as I'm sure you're acutely aware.
Absolutely. We've had a gloomy time in England whilst you went away in Canaries and had a really great time and got some vitamin D and good sort of sunshine and some rest.
That's it. Hopefully the markets will be shining on me when I'm back in full swing next week.
Oh, absolutely. So Chris, you went on a really special week. So this week we have half term.
Yep.
Why is half term a special week?
Well, half term is a really, this particular half term is a really special one because they also started in the US with bank holiday, right? Monday, the US wasn't open for trade. And this means that not only was the UK on half term, the US was off as well. This is one of the kind of global or Western half terms that we get across the globe. Trust me, there are a lot of German and Dutch holiday goers as well. A lot of kids from all over the world. So it was, the whole of Europe was off with us too. So this means that volumes on this particular month are a little bit different. And I think you've got to kind of treat each week throughout the year slightly differently from the last, right? They say that no man stands in the same river twice. That's because the river is never the same and nor is the man, apparently. Well, financial markets and trades, there are some patterns that repeat, but there are some changes, and some changes you can anticipate. And these are the sort of things where you've got to make your plan. You've got to have a good go at understanding this in order to try and capture the differences that happen from week to week. So, start of the year, all about Trump, right? We've had a load of volatility, loads of interesting news. We roll into half-term week. US off. Volumes down. I was teaching a black cab driver actually earlier on today. Mm-hmm. Shout out to Aaron. We were looking at he was telling me, in fact, that he's had an incredibly quiet week because of half term. This just kind of echoes the point, right? We're not seeing as many people in the city as you would normally do. And that means that there are fewer trades being placed than normally are. Okay, so let's talk about the charts a little bit and how this kind of moves into trading, because half-term week means something. Does that mean we don't trade? Does it mean we trade more? Well, it makes me look at something very specific in the way we trade. We're going to take a look here at the US stock markets. This is the S&P futures. You'll see this mirrored on the NASDAQ, on the Dow Jones, everywhere, right? Volumes are lighter. Does that mean no moves? No, it does not. It means sometimes you get more exaggerated moves. And why is this happening? Well, if you think about a normal trading day, if you're a big trader or a big broker and you have an order from one of your big clients to, let's say, buy 10,000 Apple shares, you may be able to, in a busy market, be able to kind of hide those orders. You may be able to just put a 1,000 in here, 1,000 in there. Someone else is selling into you. You can kind of hide these bigger trades without anyone really getting a sniff of what you're up to. However, if you are doing this in a market without much volume, the whole market can get a real sniff of where all of the buying or selling is coming in quickly, and this can lead to some pretty sharp opens. So we'll take a look at Friday, 2:30 candle here. Basically, 5-minute breakout would have done you pretty well here. We've had a huge decline on Friday of this week on half-term week. Scroll back to Thursday, you've guessed it, 5 minutes after the open. Here, we get a crack through and another absolutely mammoth 30 minutes. I'm sure you're going to talk to us a little bit about this later yourself, Z.
Absolutely.
The thing that breaks the rule and in a way proves it is Wednesday, we didn't get that breakout around 2:30 in the same way. It ran swept these lows before pushing on. But 3 out of 4 ain't bad, right? See this on Tuesday. Sell-off that we had on the open, a lovely decline, another big washout. So these opens around half-term weeks, around low volume weeks, are incredibly more predictable and more likely to be follow-through moves than opens at any other time of the year. So we kind of already got Easter in mind. The US quite quite like a bank holiday the first half of the year. Thanksgiving week, 4th of July week, onto the summer holidays. This could work very well through July and August. Thanksgiving week, Christmas, these are the sort of times when you might want to consider maybe looking at the market slightly differently, and maybe keeping an eye on those opens with a little bit more interest than you would normally. So that's my takeaway as someone who's been away from the market a little while. It's nice to see something simple working very, very well. But yeah, maybe you can give us a little more insight into what really went on this week with me being away.
Yeah, well, see, we're on holiday having a good time. I was waiting for Trump to tweet and put a post on Truth Socials. He did not do that, so there was a quiet Trump week.
That's unusual, right? We've not seen that this year too much.
Very unusual, so he did not impact the market. So I did look into the news, and we did have unemployment claims for this Thursday.
Yep.
And we had a few numbers to go through, so I was on the trading floor looking at these numbers here. If I can sort of show them to you here, what we can see is we had a forecast of 215,000 unemployment numbers. What came out, Chris?
219.
219 came out. So that gave me a confidence for a setup on NASDAQ, and that's what I did. So I let the 130 mark happen. It took a higher high out. It wicked there, and I was able to short this pretty easy with I think it was a 16 pip point stop loss that I was holding.
Nice.
So it didn't trigger my stop loss, but it did trigger a good short for me, and I was able to catch all of this move and sort of take it from, you can say, around 22,200 all the way down to 22,055. 22,055. So that was my trade for the week.
Nice.
On a quiet week when we've had bank holidays, Trump not tweeting about the markets, no tariff talks. To get a move like that,
we've been spoiled, haven't we, Z?
We have been spoiled. We've been spoiled with a bunch of these different moves. But what I wanted to show you was emphasize a few things. So we had this one big move that happened on Thursday with unemployment claims, and then I think we talked about this last week. History does repeat itself. It tends to repeat itself. So what happened today, Chris, on expiration?
Well, yeah, those of you who joined us last time out will know that this is exactly what we saw that week as well. We had pretty much a move from around the same spot and pretty much the same action at pretty much the same time. You say you can't script this stuff sometimes. I mean, I've just said these things don't repeat themselves all the time, but sometimes they do echo a little bit, and we saw that today, and huge washout. It is option expiry today. We will talk a little bit more about this later on as we focus on what's going on next week. But yeah, option expiry Friday. It's often a difficult Friday to trade. This one, not.
Not at all. It was in our pockets. It sort of took out highs and then just went for a clean sweep below. And we've had these moments last week as well. If we look back into the chart, we've had certain amount of moves on a Thursday, a Friday, and a Tuesday of last week, and we see the same thing happen this week. So that's it for this week for now. I mean, it's been a quiet week. Chris, do we have anything upcoming for the following week?
Yeah, well, let me first try to link back to have a look at the calendar. I want to talk quickly about some of the data that we had out of Japan this week. If I can work out an Apple, maybe you're my man for this.
Absolutely.
So if we have a look at the inflation figures that came out from Japan last night, these things are getting pretty damn hot. National core inflation up above 3%, 3.2%, hotter than forecast. Headline CPI is at 4% in Japan. Right, their interest rates are miraculously all the way. Remember when we had our interest rates down at near zero? Well, they're still there. And they're running into 4% headline inflation. Our inflation is nowhere near that now. Yet our rates are 4.5%. So there's a real chance we get a kind of almost like a seesaw effect happening here between what's happening with rates domestically, where maybe in the UK, certainly there was a sign a couple of weeks ago that rates might be cut a lot more, albeit inflation maybe suggests otherwise. It was a tiny bit hotter than expected, but nowhere near as high as this. And if you see the Bank of Japan maintain rates at 0.5, I feel like this could really start to crush them. I mean, they've barely had any inflation for my whole lifetime. And this is, them maybe not realizing what they need to do to fix inflation. Normally, the way to fix inflation is to get your base rate above the inflation rate. Well, they are a long, long, long way from making that happen. So I feel like the dollar yen trade could be a really, really interesting one. It's been such a volatile market since we started raising rates. Everyone was around 0% in March of 2022. Now things look remarkably different, except a few outliers. So yeah, I think there's some real interest in the yen pairs over the course of this year. I think it could be a really rocky ride, and very, very interested with some of the price action. We're knocking around 150 at the moment. It has been resistance a few times in the past. Could well be support if we crack through there. So yeah, that's kind of my big takeaway in the brief 2 days that I've been back at my desk. I feel like that's a pretty interesting thing to take on board.
Absolutely. So the week ahead, Chris, we've talked about unemployment claims. We talked about Japanese interest rates. All of these are building up to a sort of, you can say, a trend in the market. And with expirations, we've seen some nice shorts sort of play up. What do we have coming up for the following week?
Yeah, well, maybe this is a good time to go and have a look at what's going on with these option expiries. I love the option expiry story. I think it's a really, really interesting one, especially on this day, exactly 5 years ago to the day. So that was kind of the beginning of COVID, or at least like the lockdowns that we had from COVID. We knew about COVID in end of December into January, but in fact, we can take a look at the charts again, and I can show you what this looked like. We had a real move to all-time highs at the time, up to this was the grind higher. Remember the S&P when it was down in the 2s? It was knocking up into the 3s here, and this was a lovely rally to what was all-time highs on the Wednesday, the Thursday of the 20th of Feb. Option expiry. This is when the monthly options expire. We have a lot of 0 day to expiry options now, so it's maybe a little bit different. That wasn't around during COVID, but the monthly options are still incredibly important. And when these options markets expire, this almost lets the market change trend, or potentially change trend. Doesn't always happen, nothing always does, but this is a potential turning point for trades. And we kind of had this little wobble when we understood what COVID was, but the sell-off that we had in the stock market, the puts, these options that were used by the hedge funds to kind of hedge their positions, they're only allowed to go short, only allowed to go long, the likes of your Cathy Woods in the ARK fund and what have you. They're in long only positions, but they can hedge with options, and they buy puts. If the market sells off, if it sells off quickly, as it tends to do when it goes down, these puts become incredibly valuable. You can cash them in, and guess what you do with them? You buy more stocks. And the market kept pushing and pushing and pushing and pushing until we got to that option expiry. I've marked it up here, the same date, February 21st, Friday the 21st of Feb, exactly 5 years to the day. Wow. This was the option expiry that we saw. What then happened and ensued after that? The door was open for lower, and we saw a 35+% decline on the Nasdaq. I think it was about 30% or 32% on the S&P, and it was the day before the option expiry that it started to sell off. Maybe we'll have a look at what this looks like on a daily chart yesterday to see what's happening. And what I find the most interesting about this is that, just to be aware, that the third Friday of each month is when these options expire, right? And the quarterly options expire in March, June, September, and December. When we roll from option expiry in Feb, all-time highs the day before, all the way down to option expiry in March of 2020, this was not the low. It was 1 day from the low. Feb OPEX 1 day from the high. March OPEX 1 day from the low. We gapped lower onto the Monday, and then, well, I mean, we can zoom out on this and see what's happened since. That was it. We never saw those numbers ever again. And this was an option expiry window. A lot of people think this was a virus. This was an option expiry trade, Z, and that's all it was. And if you got short at the start of the Feb and you got long shortly after March, you probably are sitting fairly pretty. And where are we now? Well, we had the all-time high not on the Thursday this time, it was the Wednesday, but we've seen weakness on the Thursday. We're seeing weakness on the Friday. Okay, what do we want to see? There's one more thing that I would really like to see to get this rolling over. And by no means am I expecting this to be something that's akin to 2020 in terms of size. But if you look back at 2020, you'll see the volumes really pick up. And if we, as of next week, start to see these volumes really start to squeeze higher as the market declines, big selling on higher volume, maybe we'll get something, maybe not 30%. I mean, I'll be happy with a 3% decline, Z. But if we can get something between 5 and 10, that would be lovely, because the markets, as a day trader, you can make a lot of money being along the stock market, right? Buying dips, BTFD. This is a strategy. But you can make a lot more money, an awful lot more quickly when this market is selling off. So if you can find opportunities to get short, again, I'm not suggesting that this necessarily will be, but this is one of those windows of potential weakness off at an all-time high into option expiry, with plenty of reasons to be fearful, with inflation already pushing highs and Trump tariffs constantly simmering in the background. I don't think it'll take too much for this market to feel a little bit of a shakedown, but watch those volumes next week.
Yeah, absolutely. So as we get into next week, we will look into the Trump tariffs more and more. Yeah. Could it be a Trump Truth Social post? Could it be a tweet?
We're due one, aren't we? We are due one.
We are due one. Could it be that simple of a move for this to start falling? We do have an economist coming in next week, and he will go through the Trump 2.0 tariffs with us. So this is a small preview for next week. Do tune in. And we appreciate all the questions that do get answered on the podcast, that do get sort of asked on the way, and we will get many questions of yours answered for the tariffs, because we've had a few students, Chris, that did ask about the tariffs.
Yeah, I think this is a really good brief, and Jonathan's going to be the perfect guy to come in and talk you guys through this next week. He's very knowledgeable when it comes to things. He knows a few interesting people who can kind of keep him on the right path with this sort of thing, and a student of the fundamentals, and I think that's something that you really need to understand when you're looking at Trump tariffs and what they mean, and he will hopefully cut through some of the complexities and make this all sing for you guys as potential day trading or swing trading opportunities. So pretty happy with what's to come. Hopefully Trump will be back next week. I've missed him in my time away from the markets. Maybe he's been on his half-term holidays too. But we'll be back next week. Any parting remarks? See?
I think we look forward to next week and see what the market has with expirations. We'll see what Trump has to say, and we will go into Trump 2.0 tariffs.
All right. Look forward to it. Cheers, Z.
Thank you.